Good morning, good afternoon, people joining indeed. I see the number going up now fast. Hi, my name is Wouter Koelewijn. I'm a senior advisor for the Global Impact Investing Network based in the Netherlands. So I'm an advisor working in one of the regions where the GIN is active and where more than 10% of the member organizations that are part of the GIN are located. Welcome to the breakout room that's about unlocking institutional capital, and a special welcome to our speakers, Mrs. Karlijn van Lierop, MN, Mr. Lasitha Perera, GuarantCo, and Mr. Sébastien Duquet, Symbiotics. Warm welcome to you all. I will introduce our speakers in more detail in a couple of minutes. Before we formally start, I want to cover a few technical details about this Zoom meeting, because it's really a Zoom meeting, so not a webinar, which is technically different. So, and the logistics of how you can connect with others and ask questions. So we have a broad global audience in this breakout room now, more than 105. The number is coming up every second. Now 106, 7 participants. So the room is open and on the record, so it's not a closed door session. So there may be journalists in the room. I should mention that at the beginning. You as an audience can move to another breakout room. So the whole purpose of this breakout sessions for you is to get as much as practical, relevant and useful information as you can. So you can hop in and out of breakout room whenever you like. My role as a moderator is to set up speakers, to share specific, practical, innovative examples of how their organization is actually practicing the next normal in here and now. So I will be interviewing our speakers, and I will be a translator or a jargon buster and a timekeeper for you. And I will field questions from you, and this is an important part. So this webinar is really two parts. So this breakout room, I should say. The first half, 25 minutes of this breakout room, will consist of short interviews with our 3 speakers. And the second half is really about your questions to the speakers. So we have a tech person and a question lead from the GIN. My colleague Diari DJ is our tech lead. So if you have any tech problems, you need tech support, you can reach her via the chat. And when you scroll with your mouse to the bottom of your screen, you see the chat function. If you go to the chat box, automatically, when you type a message, it goes to everyone. So, but you should then click on the drop-down menu and select Diari DJ Tech Support, and you can ask your tech question. Then my colleague Claude, maybe you can raise your hand, Claude, so then we can see you.
Hi, everyone.
Hi,
Pleasure to meet you.
Hi. So my colleague Claude is our questions lead. So any questions that you have for our speakers, you can send them over to Claude. Claude is collecting all the questions. So Claude has a questions lead next to his name. If you are in the chat box, you can see questions lead Claude Amstutz GIN co-host. So please send your questions to Claude, not to me or to the panelists, because we will not see them. Claude will collect everything and send it over to me, so I will ask the questions to the speakers. So if you have any questions about this, please reach out to our tech support DRE DJ. So chat box for the Q&A part. That's that. Well, then we will go over to start with the interviews. So when we say institutional capital in this session, we will focus on the private sector. So institutions that act independently from governments. So that might include pension funds, insurers, sovereign wealth funds, or endowments, for instance. And the question that we will tackle is, how can they, institutional investors, contribute to inclusive economic growth? So what innovations enable them to contribute to inclusive economic growth? Although we have 3 speakers, this is not a regular panel session. First, our speakers will each provide their own unique perspective on the topic of our session during a 5-minute interview. And then these interviews will serve as the introduction for the second part, as I just explained, the second part when they will discuss your questions. So during the interviews, you can already start now during the interviews. When you have any question, just send them over to Claude and we will cover them in the second part of this breakout session. So in order of appearance, our speakers are Mrs. Karlijn van Lierop, Director of Responsible Investment and Governance at MN, the third largest pension administrator and asset manager in the Netherlands. Next, I will speak with Mr. Lasitha Perera, CEO of GuarantCo, part of Cardano Development. Hi, Lasitha. And third, Mr. Sébastien Duquet, Chief Investment Officer at Symbiotics. A warm welcome to the three of you. Over to our first speaker, Mrs. Karlijn van Lierop, Director of Responsible Investment and Governance at MN. Welcome, Karlijn, again.
Thank you.
So, Karlijn, you're heading the ESG team, member of the management team of Fiduciary Advice at MN. As I just said, the third largest pension administrator and asset manager in the Netherlands. You are a board member of the Institutional Investor Group on Climate Change and a member of the management committee of the platform Living Wage Financials. So before we're going to speak about that, because that's clearly about inclusive economic growth, can you briefly describe how MN relates to the pension funds it serves?
Yeah, sure, definitely, and great to be here. Hi, everyone. It's very exciting to be participating today. MN is the third largest fiduciary and asset manager in the Netherlands, indeed. And responsible investment and sustainability is very much at the heart of how we invest and is well embedded in our investment processes and the way that we invest in our investment decision-making processes as well. Large pension funds like PMT and PME in the Netherlands are our clients, and we work for them, but also very closely together. So it's more like a partnership or co-creation. We advise them in regarding many topics, also when it comes to impact investing. So we could advise them on a specific target or themes to look into, or an impact framework, but we also assist them in selecting and monitoring our external managers, including also impact managers. Yeah.
Thank you for that introduction, Karlijn. And so for MN, economic growth and prosperity is not only about financial results, but also about inclusiveness and about combating climate change.
Yeah.
Yeah. So in this session, of course, we had today's session of Next Normal Now is about inclusiveness. Yeah. But I would also like to invite you to briefly share a little bit about what you're working on more broadly at IIGCC and MN in advancing the climate agenda, and about MN's broader impact investing agenda. Can you share a few words about those?
Yeah.
I know a lot, but...
Yeah, definitely. Indeed, let's talk today about inclusiveness and also the social aspects of what we do in our strategies, but maybe start with what we do in terms of climate, because we feel a strong responsibility when it comes to climate. It's a key component of our work. And we look at the topic of climate actually from two perspectives. One perspective is the impact of climate change on our portfolios. And the other one is the impact that we can have with our portfolios on the topic of climate change. So the first one is more about mitigating risk, assessing risk, decarbonizing portfolios, and to really build strong climate resilient strategies. And we've designed climate screenings for our clients to make that work. The second part is more about the impact that we can make. What is it that we can do to combat climate change and to contribute to a sustainable future with our investments, and also a sustainable future for our beneficiaries, the beneficiaries that get a pension with our pension funds. So we can make impact by accelerating the energy transition with our impact investments, and by pushing companies and sectors towards net zero. And that is something that we do in our engagement work. So we have the engagement program and we have an impact investing program. And maybe I can tell a little bit more about that. We have 2 large clients, as I already mentioned, PMT, Metal Workers a pension fund in the Netherlands. They have a bold target to aim for 2 billion assets under management for their impact investing work per 2025. And PME, the other large client, has a target set recently in January to work towards 3 billion of impact investments per 2025. And together with them, we have selected a couple of themes. Some of there are energy transition, including investing in renewables and sustainable forests. Circular economy is also for PMT very important, but also access to finance or affordable housing. And for PME, more specific, and nature and climate and innovation is also very important. Yeah. So over the years, when it comes to climate, you could say we have a strategy which consists of decarbonizing with climate screenings and the risk part, and then our climate engagement, where it's very much about talking to companies in our portfolios to push them to strong strategies to become net zero, and our impact investing work. There's so much to say, but maybe I stop here and you have more follow-up questions for me, Wouter, to guide me.
Definitely, and I'm sure that, well, I saw that in the chat, my colleague Claude is already inviting the audience to send over any questions that they have for you. So definitely we will get back to that. Over to the platform Living Wage Financials. Could you briefly share with the audience what the platform is and what its goals are?
Yeah, absolutely. So our responsible investment strategy is, of course, about E, S, and G. And I think where we've seen over the last couple of years is a lot of attention regarding environment, the E, and climate. But I think focusing on S has been very important for us. So the platform Living Wage Financials is an investor platform. It's an investor coalition, so to speak, which we founded in 2018 by MN ourselves, and 2 very sustainable Dutch banks, the ASN Bank and the Triodos Bank. I'm sure you know them. And we collectively encourage, support and monitor investee companies, so companies that we invest in our portfolios, to address the non-payment of living wage in global supply chains. The reason for that is, as I just mentioned, is that the social pillar of ESG is needing more attention, and we really want to use our leverage to improve standards of living wage for workers in the global supply chain and safeguard their basic human rights, because that is very much what living wage is about. Living wage is such a good starting point because it is a enabling human right. Yeah. It helps people to meet their basic human rights and the links to issues such as reducing poverty, ending child labor, improving labor conditions as well, and reducing overtime. Because by paying a living wage, these are things that you can steer as well. So it's an enabling topic that we see, and we're very, very important in the work that we do.
I'm trying to hop in, because I think the people who join this call probably have a passion for inclusive development and will subscribe to everything you just said. But the question is, the social benefits of paying a living wage are, of course, very clear. It's instrumental in reducing poverty. But why, from an investor standpoint, why for you as an asset owner, is it rational to ask companies that you are investing in to pay more, in fact, to its employees? Can you explain that?
Yeah, sure. For us, it's pretty logic, because we're really truly committed to responsible investment and contributing to a sustainable economy, but also to equality. And we want to act with due diligence and mitigate salient human risks in our clients' investment portfolios. As such, we really want to invest in companies that act fair and responsibly. So those human rights and including the payment of living wage is very important to us. And we are convinced that companies that act with respect to people and planet have better returns in the long term. So that's also maybe where things come together. So you could say that contributing to sustainable economy and equality is making better long-term returns for the pensions of our beneficiaries. We really think it goes hand in hand. From the more sort of business case perspective, if you like, you could say that there's been lots of research that's really pointing out that paying a living wage is improving the quality of jobs. It's improving the relationship with workers. It has a positive effect on the motivation of workers, their productivity, the quality of their work. There will be less turnover of workers, and it really helps to attract and to retain them. And you could also, if you think a little bit further, you could say it could make business models more efficient and have more stability in the process. But I think for us, it is also very much about understanding your supply chain and making sure that your supply chain is also more stable. There's more stability in the supply chain. So you have suppliers where labor conditions are in place, they're reliable. You would like to have like long-term partnerships with those suppliers and with those factories. So having stability, having a proper place for workers to feel safe and to be able to work and to make a proper living is for us a logic thing to ask for when we talk about the companies and the brands that we invest in. And as I said, we really think is the social conditions and long-term benefits and long-term returns, we really think go hand in hand here. Yeah.
Yeah, well, wonderful. Well, as we speak, I see the questions that Claude is collecting from all of you are coming in. Please keep coming. I would say we will feed them in the end. There's one question which I would like to invite you to briefly touch upon before we go to the next speaker.
Yeah, sure.
And that's, how do you actually steer towards change with all these companies? Can you briefly? Yeah, I know it's maybe we can talk an afternoon about it, but briefly share what's your approach.
Yeah, we really want to have meaningful engagement with those companies and to really make an impact. And we have a couple of ingredients, you could say, that we think are really important. One is collaboration. So we have a broad range of peers that we work together with, pension funds, but also banks and insurance companies. And we collaborate and we use our leverage to have impact. So the collaboration is really the starting point. The next one is that we do our own research. We have our own methodology that we developed. It's aligned with the UNGP, but we do our own annual assessments, and it really enables us to understand those companies and sectors and to track their process. The third one would be that we have a great circle of very knowledgeable organizations close to this platform of engagement. We call them the friends of the platform. Experts, stakeholders, NGOs like Fairtrade and IDH, and a very knowledgeable HIFOS, very knowledgeable organizations that also enable us to educate ourselves. And it's a sector-wide approach. So we have about 50 companies that we talk to. So it's not one company and then doing something else, but there's a lot of focus, and we really think that in doing this from a sector perspective, we can sort of have a systemic change. Yeah.
Wonderful. Thanks so much. Well, we will speak later in the second half of this session. Thanks so much. Over to our next speaker, Mr. Lasitha Perera, Chief Executive Officer at GuarantCo. Lasitha has been the CEO at GuarantCo since 2017. Has been with the company from 2009 as Chief Investment Officer and Executive Director responsible for GuarantCo's investment activities globally. So Lasitha, again, welcome to this session. The topic of the session, inclusive economic growth, how institutional capital can be mobilized for that goal. Can you briefly explain how GuarantCo's work is contributing to inclusive economic growth?
No, absolutely. So GuarantCo is the guarantee arm of the private infrastructure development group. which is a donor-funded institution, financial institution focused on Africa and Asia. And as the name suggests, the private and the infrastructure are the key sort of themes that we focus on across the pitch companies. And Granco, from Granco sort of USP, unique selling point, is we focus on local capital market development. How do we crowd in private sector investment from local capital markets into infrastructure in developing countries? And, you know, fundamentally, what we do is just we provide guarantees that basically help investors in these local capital markets get comfortable with whatever the barrier is to investment that they're having, whether it's around the credit risk of a transaction, whether it's regulatory issues. So we are able to use our guarantee in a lot of innovative different ways to help overcome those issues.
Yeah, wonderful. So it's really about providing guarantees. It's in the name GuarantCo, guarantees to crowd in private capital. And then in terms of impact, what has been the impact of those projects in terms of inclusiveness? Can you just give some
Yeah,
insight?
so I mean, we you know, on what we focus on is how many people are getting access, improved access to infrastructure in developing countries. And you know, over Granco's 15 years of operation, we have over 43 million people have now got improved access to infrastructure. We've created over 235,000 jobs, and we've mobilized over $5.6 billion of private sector investment into infrastructure. And that's across 55 transactions, which, you know, isn't a lot, but if you think about it, we're working in developing capital markets where a lot of the things that we take for granted in developed capital markets don't exist. So on average, it takes us 2 to 3 years to do a deal there because we're having to build the financial market infrastructure alongside doing the transaction itself. So, so that's a large part of Granco's development mandate, is not just creating a project with our infrastructure project, but we're also building the infrastructure that other people can use later and replicate the transaction that we've done.
Wonderful. And then in the end, the people in these countries have, it's like affordable electricity, accommodations for students, training and employment for refugees, these kind of impacts on the ground, but after a long process of building the infrastructure.
That's correct. Yeah, absolutely right. Yeah. So we focus on, I mean, our definition of infrastructure is quite broad, but as the private infrastructure development group, we have some specific sectors that we're quite focused on: affordable housing, off-grid electricity, renewables generally, and water and sanitation, and also special economic zones.
Yeah, wonderful. So this session is about mobilizing institutional capital. So, you know, there is a lot of work to be done on the ground, and you have already achieved a lot of impress, but we know the SDGs require even more massive investments. You want to share with us a solution that you have built? Again, an innovative solution, something you would not expect immediately, like the platform living wage is also something you would say, oh, is this an asset owner asking for higher wages? So this is also, you partnered with the London Stock Exchange. Can you explain what problem did your solution with the London Stock Exchange try to solve for?
No, absolutely. So, you know, one of the challenges, even if Granco was super successful and we mobilized all the local capital that exists in Africa and developing Asia, it still wouldn't be sufficient to fill the gap, the infrastructure gap that exists. And if we really want to try and get anywhere close to meeting the SDGs by 2030, everyone recognizes that global institutional capital is what needs to come into these developing countries alongside the local capital that's there. And I think, you know, the reason that we're discussing this topic is how do we make that happen? So one of the things that we decided to do as Granco, given our local currency focus, was develop a partnership with the London Stock Exchange in 2017, where we brought some of the companies that we're working with in local capital markets into London to list their bonds in local currency on the London Stock Exchange as well. And essentially what we're trying to do is create a shop window for the likes of, you know, Karlijn, pension funds and others to see these opportunities, because otherwise they wouldn't see them, right? Unless they travel to Nairobi or to Pakistan or Nigeria, they would not see these opportunities. And what we're trying to do is basically address effectively what we call information asymmetry that exists, the perceived risk of this company for someone sitting in London versus the actual risk of that company sitting in Nigeria. And by bringing them and listing their bonds at the London Stock Exchange, what we do is give institutional capital the chance to observe, to watch these guys perform, and then over time say, you know what, maybe I'll just put a little bit of money into this bond and see how it does, right? And if it does well, then we're hoping that little bit will become a tsunami and then it'll, you know, grow. And that's kind of what we're trying to get to.
Wonderful. Yeah, it's a wonderful idea. Is it working? Yeah.
So we signed the partnership in 2017. The first number of bonds were listed in 2018. We've listed the first bond from Kenya, the first bond from Ghana. We've listed some bonds from renewable energy bonds from India and from the Philippines. We have a pipeline of bonds from Bangladesh, Tanzania, Malawi, so lots of places coming. Unfortunately, a small problem called COVID stopped us from doing much more last year, but we're hoping now to start catch up. And what's interesting is, so for example, the bond in Ghana that we issued from Ghana, that's traded a couple of times, and a couple of times people are like, wow, but actually what that means is people are taking a risk, right? Some institutional investors are actually saying, let's dip some money into this and see how it does. And what we're also now hearing is people coming to us and saying, before we issue the new bonds, hey guys, can you let us know when those are ready to come to the market? Because we might want to take a look.
Right.
And so that's quite interesting for us. And what we want to see is whether we can start building on that interest and see where that goes.
Wonderful. So if I might sum it up in one sentence, the innovative thinking behind this is, in the past, the expectation was like, we take investors to the developing world. Well, this partnership is really about taking the developing world to the investors.
Exactly. Yeah, got it.
Wonderful. Well, thanks so much. And I see many response from the audience also for you. So, really, big hand to Claude, how he is going to prioritize all these questions. But please keep coming, because we have another speaker. Thank you so much, Lasitha. We will talk more in a couple of minutes. So our last speaker, Sébastien Duquet, Chief Investment Officer at Symbiotics. Sébastien is leading the development of Symbiotics products and funds. Welcome again, Sébastien. Can you briefly explain how Symbiotics' work is contributing to inclusive economic growth, the central theme of today's Next Normal session?
Hello, Wouter. Hello, everyone. Over the last 15 years, Symbiotics' mission has been to foster sustainable development in emerging and frontier countries. We aim to become, and we are actually today, the leading market access platform for private debt impact investor in emerging and frontier countries by connecting investors to local financial intermediary and local SME. We believe that social and economical inclusion is central to our vision, as well as climate resilience. And that's why, on top of providing a risk return to our investor, we also have an impact promise, an impact narrative in which we do only sustainable finance. We have our own ESG rating system, and we conduct ESG rating for all and every single investment we do. We have our own impact tracking system. We link every single investment we do to an SDG, a main SDG and a couple of other sub-lying SDG, but we also have a labelization to do social, green and sustainable bond investment. I will explain that a bit later. And we obviously measure the outreach of our investment to make sure that we match our impact narrative, which is to push money to where it normally doesn't flow. That is to say, the basis of the pyramid in emerging and frontier countries.
Yeah.
Yeah.
Yes. So I think you're already making a bridge to the topic that I wanted to ask. So what types of investments do you make, and what kind of geographies do you invest?
So we are active only in private debt. We don't do private equity. We decided to focus only on private debt and only impact. So we have only 100% of impact investment in our fund and mandate in emerging and frontier countries. And here as well, we do only emerging and frontier countries. As of today, we have 300 investees in 82 different jurisdictions, from Cambodia to Peru, from Mexico to Cape Town, from Morocco to India. And we manage 2.5 billion of assets, around 20 different funds, and 5 single investor mandates. Those funds are promoted by a retail of bankers or distributors throughout Europe. We have 80 different partners from Stockholm to Paris, from Geneva to Amsterdam. It's different partners. They are leading in private bank in their own jurisdiction, in their own country. And that enabled us to grow by more or less 10% the last 4 years. When I joined Symbiotics 4 years ago, we were at 1.5 billion, and today we are at 2.5 billion. So the growth is there, and it's for sure planned to continue.
Yeah. So in order to mobilize more institutional capital, what kind of issues have you tried to address?
You know, investor, be it institutional or Indian investors, they are looking to invest in stock market. So that's why we plan and we try to answer to their demand. And particularly when it comes to institutional investor, even if you have 200 plus impact private debt funds that exist, we published last year a survey last November. For those that are interested, they could go on our website to see. But even if you have 200 funds, there's a lot of institutional investors that really are not finding what they are looking for in terms of mix between the risk, the return, the currency. Some would like fully hedged funds. Some like to take the local currency risk, the impact narrative, the SDG. You have institutional investors those days that say, well, I want SDG 8, 12, and 13 only. We're in discussion with one large institutional investor in Europe for a mandate, and they told us, for us, it's 8, 12, and 13. Please elaborate on that. There's a geographical coverage, and that's why sometimes for them, it's despite the fact that there's quite an interesting offering, they don't find what they're really looking for, and we have developed a capacity to tailor our mandate and our fund to their specific need in affordable cost, because all those institutional investors have also the pressure, if it's a pension fund from the pensioner, if it's an insurance company from the insurer, to control the cost of deployment. So the total expense ratio we try to achieve for all those mandates is around 1%. And that's why those solutions should work for small mandates, small meaning starting like 50 million to very large one, 500 million or 1 billion plus, without conflict of interest, which is another issue. If you have different mandates, different funds, you should guarantee each of them that you will not cannibalize one offer with the other offer, and that there will be a fair client treatment throughout you different fund and mandate. So this is quite something complex, and to convince an institutional investor that you could have an ad hoc mandate for them without cannibalizing you as a fund and without creating any conflict of interest was a long process for us to go there. But that's how our company is structured, and that's our DNA to answer to such question.
Yeah. Can you briefly explain the innovative solution that you have been able to create to address all these difficult issues?
Yeah, it's refer a bit to what Lasitha said. We go a bit further, you know. Basically, what we have done, which somehow could be seen as not so innovative, is to rebuild internally an internal marketplace in which our portfolio management team will be able to buy some transaction that will have what usually an investor will look for. That is to say a credit rating, an ESG rating, an SDG tracking, and some liquidity with tradable bonds, a broker list, a broker that could organize secondary markets. And on this internal stock market, we call it MSME bond platform internally, exists for the last 8 years. And that's enabled us to serve on a very fair client way and equally the 25 fund and mandate that we have. And that's where then if we have an institutional investor, such as, for instance, we have for the last 5 years a mandate with a very well-known Swiss pension fund, the State of Geneva pension fund for 100 million, that tell you, I want to deploy a mandate in microfinance debt only, in those jurisdictions, fully hedged or with local currency. Then you could select the bonds as a portfolio manager as you select them in the stock market and decide which of the bonds qualify for the mandate in terms of risk return and so on. So we have recreated somehow an internal stock market to answer to this demand. Today our stock market is listed in the Luxembourg one, but we are in discussion with Euronext on London Stock Exchange. But at the end of the day, what matters is not per se the jurisdiction where it's be, it's just that it matches with what people are looking for. We have an easy code, we have a Bloomberg page, so an investor could feel like if you are investing in a normal stock market, and this is our internal one. And we did that because in the market where we operate, there's no stock market. If you want to invest in the Duchambé stock exchange or in a Yerevan one, good luck. You know, it will be quite tricky. There will be very limited offering. The transaction will be difficult to secure. You will have difficulty to find broker, and sometimes even the market doesn't exist. So that's why we created that internal platform, and we have issued more than 200 bonds in the last 8 years for more than 2 billion now.
Yeah, and all that ratings, liquidity, transparency, that's all part of the platform where you put everything together.
Exactly, and we may even move a step further last year in innovation by receiving a second opinion certification. It's a bit complex, but allowing the platform to issue green, social, and sustainable bonds. And we did actually issue the first green bond through the platform in Sri Lanka last June. And for us, it was a well recognition because we received the award from Oriental Finance this year in March as the most innovative green bond in terms of structuring last year in emerging markets. And today, this labelization is also a good way for our mandate to qualify for SFDR 8 and 9. So sorry for those that are not EU-based, but it's a new EU regulation, and I think the audience may be pretty familiar with it. And all our fund and all our mandate qualify SFDR 9. We today do not have any fund that want to be 8, which is environment only, but with our green bond access, it's quite easy at the end of the day to deploy a fund to that. And the labelization is really a good way also for our mandate investor to demonstrate to them that the impact narrative is there.
Yeah.
And when it's come to risk return, it's depending, you know, if you have some mandate that asks for more risk or less risk, then you could play with the quality of the insurer, the duration, the subordination of senior transaction, the country, structuring a first loss, and that's relatively easy to be done as soon as you have the marketplace to invest.
Yeah.
So somehow we transform something a bit illiquid into something relatively liquid and tradable as usual.
And it's like a switchboard where you can play with the risk and the return.
Exactly, and this is used mostly for our internal fund. Keep in mind, we have 2.5 billion ourselves to deploy with 25 funds on mandate, but also by internal investor. Some investors like Triodos have used the platform in the past, and we have also some foundation, Neri Foundation. Amundi, for its green bond fund, is looking at our platform. Proparco, as a DFI, is about to using the IFU, the Danish corporation, bought a basket of bonds through the platform. So it's also recognized by those that have a team that could go to the field as a way to speed up the deployment or to select on pinpoints on specific assets that they could not structure or develop internally.
So and for the institutional asset owners, or the pension funds, insurers, etc., for them it's a gateway.
It's a gateway, and it's easy then to demonstrate why you could tailor the mandate really to the need in terms of risk return, in terms of SDG tracking, in terms of duration, in terms of yield, and that's a very convincing argument for deploying institutional investor mandate.
For the audience, what would you say is the lessons learned from this in a broader sense, when it's about getting more institutional capital on board for financial inclusion? What's the broader lesson that you share?
Yeah, you know, at the end of the day, if our global economy is organized with stock markets and rating and those things, it's because those provide some value to investors. So at the end of the day, you could try to fight against rating, you could fight against stock market, you could fight against liquidity, but if they exist, it's because they provide value for institutional investors. So what we have tried to do is to spend our energy in redeveloping the mainstream tools that the mainstream institutional investor use for investing. It's liquid, it's rating, it's liquid bond, it's Bloomberg easing, and all those things. So for me, the lesson learned for innovation is sometimes do not try to innovate too much. Just try to apply what exists elsewhere to your own market. And that's what we have tried to do. And it's already a lot of work, because it's meant to rebuild a stock market that doesn't exist for your own need, but also for external needs. So that's where some of the innovation is. And we try to follow all the move with the labelization of green bond, social bond, sustainable bond, SFDR9. So you also have to frequently refresh all of this, because the regulation or the evolution of what investors are looking for create additional demand. Maybe tomorrow we'll have to comply with the EU taxonomy, and then to revise all the ways the platform works to comply with those EU taxonomy in social or green or sustainable environments. So the innovation sometimes is just to apply what exists elsewhere to your own environment.
Yeah.
Not
right,
very funny, but this is how it is.
You're practical.
Yes.
Yeah. Great. I'm looking at the questions that the audience has sent over to you. The first question is for you, in fact, Sébastien. It's I will just start with you. So can you very briefly tell, why do you focus only on private debt? Because inclusive finance can be more than private debt, right?
Yes, exactly. So the explanation is, historically, it was very difficult to find any interesting listed impact investment in emerging and frontier markets. So 15 years ago, when we started, simply does not exist. Nowadays, you find a bit more, particularly in some markets like in Lima or in Mumbai. You might find in the stock market a couple of interesting fixed income listed investments that match the impact narrative that we want to deploy. So we have actually now developed a fund that have 1/3 of its investment listed, on while still tracking the SDG on the impact the way we want to have it. But historically, it was just that the demand wasn't there. The demand is coming, so that's where we may evolve with the demand, developing also a UCITS fund. That's one of the projects we work with, which meaning UCITS, a fund allows for retail distribution in Europe, mixing a bit this private debt investment that we could do with our platform and investment we could do on listed stock market in emerging and frontier market, because we want to keep this focus, because we have to acknowledge that there's more and more interested impact fixed income bonds issue in Yerevan, in Casablanca, or in Lima that you could buy there and there. But there are still not so many at the end of the day. So it was just to answer to the fact that it didn't exist. So we have to do it that way.
Okay, clear. By the way, this was an question from Evits, I should say Evits Nielrak. I have a question for all of the speakers, all of our speakers, from Janet. Janet, I would like to ask the panelists how to encourage investors. How do you think investors should be encouraged to support intermediaries, and capacity building, which is much needed to facilitate systemic change. So what's your view on supporting intermediaries and capacity building or technical assistance? Any views on that? Who would like to start?
I'm happy to offer an opinion.
Lasitha. Yeah.
So from our experience, capacity building is really, really important, but it can't be done in a vacuum. And what I mean by that is you need to do it alongside a transaction. So if an investor is looking at one of our transactions, we invest in capacity building alongside that transaction to help them understand why we think it's a good deal, why we think it's a good investment for them. Yeah. What we have done in the past is do a training course on capital markets in Nigeria, for example. People turn up, they listen, but then nothing happens after that. But then we do a deal, a bond in Nigeria, and we run the capacity building alongside it so that they're expected to put some money in at the end. That suddenly actually is transformational and makes a difference. So we think capacity building is a very key part of it, but it has to be done in a more practical approach.
Yeah, I would completely agree with what Lasitha said. For our green bond, we started with the idea to push some of our investors to issue themselves their green bond without using our platform. And then it's turned out to be quite complicated. They had the portfolio, some microfinance banks, they were financing already energy efficiency or renewable energy projects. So they had the portfolio, but just to understand what is a green bond ICMA labelization, how you follow the use of proceeds. It was a lot of work with, unfortunately, relatively limited technical assistance given by DFI to help them. So after having pushed them during 6 months, trying to deploy their own green bond, we realized that it was still quite a step for them, and we moved to do the green bond at the platform level. But they still have a bit of work. They still have to report to us using a use of proceeds and all the check that we have to do. And we have developed a 25,000 euro program to give them some TA and to enable them to do that. And for the last 2 years, we have not been able to secure a single grant from a DFI to help us encourage those investees throughout the globe to develop a green bond framework with us. It's quite strange because everybody say, well, we want green financing, etc. And you say, if you approach a DFI and told them with 1 million, we could do together 40 different green bonds in 20 markets where there have been no green bond. Keep in mind the green bond we did in Sri Lanka was the first one. So we could do green bond in Benin, in Togo, in Senegal, where there have been no green bond, and it costs 25,000 euros. And no one financed that because they are not pragmatic, they want large program, and they want to create intermediary where sometimes there's no need to create intermediary. Intermediary exists, just use the one that you have in front of you and encourage them to go in the step where they have to go. So that's why sometimes people want to reinvent a lot of things, building intermediary, etc. On the contrary, they should encourage a local stock market if they exist. They should encourage intermediary platform if they are, like ours or the one of GuarantCo, as a way to attract those markets. And then the amount needed are pretty small. You don't need to spend millions. Just 1,000 of euro is enough.
Right. Thank you. Karlijn, is capacity building on the ground already a part of the platform living wage, or does it play a role at the moment, or is it not?
No, I think it's the platform living wage is an engagement platform. Yeah. It works a bit differently because we talk to the companies that we invest in, and we dig into their supply chains and suppliers to be sure that things are properly organized and there is a living wage being paid. I think this would more apply to our approach regarding impact investing. Yeah. And I think as an institutional investor, we're very we have a very structured approach. So our mandates are very tight. So it's very clearly defined in which geographies or currencies or risk return appetites they're defined, and what and how we can invest. I think, yeah, sort of in general, there's a clear view what our clients are looking for. They have investment beliefs that trickle down to the kinds of instruments and asset classes they're looking for. And I think they understand the tools and instruments pretty well, sort of generically speaking. But I think I'm also a bit sort of intrigued or inspired here as well, because I think the impression or the perspective on emerging markets, for instance, is also something which is good to, you know, to refresh often, and to, you know, if you would feel like frontier markets or emerging markets have a certain risk appetite, and you didn't check or you didn't, you know, get the education or the latest views or insights on is that really the case, then I think that's something that's interesting for asset owners. You know, to constantly be sure that you're well educated, because of course in those markets there's the biggest impact that you can make in terms of SDGs, etc. Yeah.
So thanks so much. So we have talked for 50 minutes, and it's for me it feels like we just started, but it's already time to get back to the main room. There is one other question that I would. There are many more questions that I would have liked to discuss with you. There's one question that I'm just going to mention, just as an invitation to you to think about. It was a question, we're not going to discuss it. Question from Salua Sehili from the African Development Bank, but just for you as an idea, what can multinational development banks do to facilitate channeling of such institutional impact investments to Africa? So maybe something to think for you, and I will follow up with the name of Salua after. Maybe you can get in touch afterwards.
Yeah, because we may need 3 hours to answer that.
Absolutely. Thank you so much, dear speakers, Karlijn, Lasitha, Sébastien. We have discussed so much. Certainly all initiatives are not yet mainstream, but have great potential to contribute to the systemic change that's needed to drive progress to a capitalism that works for all. I want to thank you again, dear speakers and audience. And I want to invite all of you attendees to join us during the upcoming fireside chat with Carol Ann Hilton. She is a fresh new voice in the space, and so please join the main webinar. You can do that by using your unique access link, which is on top in the registration confirmation email that you got. If you click on that, you will return to your to the main room. So please use your unique access link provided in your registration confirmation email to go back to the main session. Thank you again very much.
Thank you, everybody.
Thank you, Zajin. Ciao.
Bye.